Hello, I'm Alan Kohler, founder of Eureka Report, finance presenter on ABC and columnist for the ABC as well.
And I'm Stephen Mayne, contributor at Intelligent Investor, founder of Crikey.com and shareholder activist. And we are, for the first time in 2025, the Money Café.
And it's a bit noisy, sorry everyone, but there we are.
We've asked them to turn the music down several times.
But they won't.
But it's been 6 weeks between drinks, Alan, so it's nice to see you. Have you had a good break?
Yes, and you?
I've had a nice break. Had a week in Sydney and a few days down at Phillip Island, which was good. And can you believe there were 15 EGMs in January of Perth-based mining companies trying to raise money? So I thought in January nothing happens, but there's been 15 EGMs in Perth of small mining companies getting approval for raising capital. So it never stops.
Doesn't ever stop.
Anyway, but look, we should deal with the breaking news.
CPI, the inflation rate for the December quarter, out this morning, just as we speak. Headline, 0.2% for the quarter, 2.4% for the year. And the trimmed mean, which is what the RBA watches, 0.5% for the quarter, 3.2% for the year. 0.5% obviously in one quarter is 2% for the year annualised, because it's times 4.
So it's coming down.
It's definitely coming down, and I'm hanging right out there with a definite forecast that they will not cut interest rates on February the 18th when they next conclude their 2-day meeting.
But these numbers are a good sign. Why wouldn't they cut? Because the inflation's coming down.
I'm looking a bit shaky right here.
Yes.
I mean, I'm worried.
February 18, they will cut, and then Albo will go to a April 12 election to avoid the March 25 budget. And if they don't cut, he'll go later, we'll have a budget, and he'll go on May 17. So I reckon that the decision to cut or not is actually very consequential, and they'll be happy with these numbers because it does increase the likelihood of the cut.
I think it does increase the likelihood of a cut. The reason I'm saying there won't be a cut is because unemployment is still too low at 4%. And in fact, unemployment is declining, and the RBA never cuts, almost never cuts interest rates when unemployment is declining. It cuts interest rates in order to prevent unemployment from rising too much. And so that's what I think is the more important number than today's CPI, even though the CPI looks pretty much okay. So look, I'm sticking with my forecast of no rate cut in February. How about that?
And the market is against you.
Market is definitely against me.
That's
the market is 80% before this CPI. The market was 80% saying rate cut in February. So
this is one of the most political interest rate decisions of all time. I mean, maybe the 2007 Ian Macfarlane cutting interest rates during the election campaign, which really sent Howard and Costello off course. But this is very, very consequential decision. Surely they'll look at the politics just in the back of their mind, and they'll say,
no, they can't.
I know they
absolutely cannot and won't. I mean, honestly, it's like it's a heads they win, tails they don't lose, or I don't know. I mean, I don't think they can take any account of the politics of it. They've just got to make a decision, and
Anyway, well, you say no cut, I say cut. I'll see you next time, and we'll know who's right. Now we need to talk about DeepSeek.
DeepSeek, yes,
incredible.
Which is the Chinese AI version of ChatGPT, which has been released this week. Now it's about the third version of DeepSeek. This one is the reasoning. It's called R1, and it's the reasoning thing. Up to now, they've been doing inference models. People who understand AI might understand what all that means, because I certainly don't. But what's interesting? One of the interesting things about DeepSeek is the part of the reason they've been able to come in and have come in with a much cheaper version of it is that they were unable to get NVIDIA's expensive chips.
officially anyway.
They were bad. No, they didn't get them. These are the F100s or whatever. Mm-hmm. And so the whole thing is based on the previous cheaper NVIDIA chips. And they had to do a lot of workarounds, and they had to figure out how to do it. And OpenAI and the rest of the AI people in the US have just been using the expensive NVIDIA chips and just been spending the money on them. And that's been easier to do. But DeepSeek's been having to do this kind of very innovative workarounds using the cheaper NVIDIA chips. So I think that's interesting.
Familiar story. It's a Chinese knockoff, and they can do it cheaper than the Americans.
Well, it is a familiar story, isn't it?
That's the story.
And it certainly has changed a lot of stuff in the world of AI.
Yeah, that's right. Well, obviously the size of the CapEx, Trump's big Stargate announcement, $500 billion. A lot of people now questioning the overspend on the infrastructure and the data centers.
No, if DeepSeek's thing catches on and it turns out to be cheaper to run AI than everyone thought, they'll need much more infrastructure. The infrastructure will be even greater. And the other thing worth noting is that the only losers out of DeepSeek are NVIDIA and the AI companies. The winners...
And the power companies. Nuclear shares were down 10% across the board in the US yesterday because they're not going to need as much power because the perception is that we're not going to build as many of these
fair enough.
enormous data centres.
Yeah. So no, that's rubbish. That's not true. They're going to need more data centres. And the Apple and Microsoft, Google, Amazon, they're all going to win out of it because they're all buyers of AI, and it's going to be cheaper for them.
Yeah.
So it's it isn't simply the case that it's the end of the tech bubble or whatever.
No, it's just it's a good solution because it was going to be ridiculously expensive, and now if we can get AI for cheaper then
that's great.
Consumers and companies are going to pay less for it.
But it is a big challenge for NVIDIA.
Yes.
NVIDIA and OpenAI, which is not listed, and some of the other sort of listed AI companies, they are in a bit of trouble.
And hopefully it gets Trump back and a bit more focused on, what should have been the main game, which is competing with China. Instead, Trump's off doing everything else. And hopefully this one brings it back to, America's got a big competitor in China, and what are they doing to win that game globally? But, it's just chaos every day with Trump at the moment, isn't it?
Well, last night there was a blanket pause or a stoppage on all federal spending I don't fully understand how they're defining it. They're saying that it's not on individual payments, but actually,
grants, loans, anything to do with
massive amounts. Foreign aid.
Biggest ever across the board pause. So this is a sort of a flood the zone. We're going to shrink the government, so let's just do a massive pause and see what chaos, see how loud the squeals are. Because the libertarian wing of the MAGA base, they want to see a massive cut to the size of government. So think of Abbott's 2014 budget times 10. You get elected and you announce a massive slash and burn, but it's incredibly hard and people blow back. So these cuts won't be permanent, but it's just more chaos and let's see what we can get away with. And he did warn he was going to do it, and he's doing it.
The other thing I'm really interested in about Trump is the tariffs. He's kind of really going for tariffs. He did it on Colombia to get them
for 24 hours, because their leftist president pushed back on taking deportees.
He's clearly starting to use tariffs as a weapon, a geopolitical weapon. And I'm wondering whether the plan is to use tariffs as a kind of across-the-board GST.
Well, he's talking about you can cut income tax if you just do it all on tariffs. So he sees that switch. Yeah.
I mean, tariffs are an indirect tax on Americans, right? That simply goes onto the price of their products, like a GST.
But if they've got more money in their pockets from tax cuts, then they can pay more for their tariffed foreign goods.
Yeah. So I wonder whether Trump is actually thinking about, and his economic cronies are thinking about a 25% effectively GST via tariffs, which he can explain away as being paid by other countries, which clearly is not.
Yeah, but I mean, his allies are actually one of the guardrails because he can't sack foreign prime ministers. But obviously the threat of tariffs is the largest leverage he's got to stand over other countries. I mean, the Colombian bloke folded in 2 seconds. I mean, the Canadians have got the best leverage of all because they can make New York go dark because they supply so much electricity into the northern parts of America. But I reckon the West, people need to collaborate and have a multinational response to the Americans. And the Canadians are very, very powerful in that.
It's probably worth noting that during the Biden term, there were basically 2 planes of deportees going to Colombia every week.
Yeah.
There was tons of deportation to Colombia. What Trump wanted to do was to clap them in handcuffs and leg irons.
Military plane, so send a message.
A military plane, and the Colombia objected to the military plane. And that was the only thing. That wasn't that they were refusing the deportation.
It was the treatment. Yeah, that's right. But look, they are cracking on with that. So they're going to need to build a lot of internal prisons because when you pick people up, you got to put them somewhere. They're trying to get around the court process, so they're not going to have to get court approval to deport. And then the next biggest challenge is getting countries to agree to take it. And clearly the strategy is going to be take them or we tariff you. So Colombia was just that dry run for that. Mexico used to take non-Mexican migrants, sort of, an offshore solution or an out-of-country solution, as we saw with the Australian debate with Nauru and PNG, Manus Island. So he is looking, I reckon he's going to have a crack at, over 1 million people getting deported, and it's going to be very expensive. There'll be a lot of internal prisons and a lot of disputes with countries where he's trying to fly the people to.
I read some economists have been saying that if he does that, it'll cause a recession.
Well, that's right, because farm workers are going to not be available, food prices are going to go up, you can't find builders to do your renovation and fix your roof. So, yeah, there will be cost inflation from labour shortages. So,
as I wrote the other day, it's great to watch from a safe distance.
It is. And I must say, the last thing is that the big 3 confirmations this week will be Kennedy in health, Tulsi Gabbard as Director of National Intelligence, and Kash Patel for the FBI. So just this morning, the Kennedy family clash, Caroline Kennedy's 6-minute letter to the senators that she read was one of the most powerful moral statements I think you'd ever see. Describing him as a predator, talking about how he got his younger brothers addicted to drugs, some of them died, conflicts of interest, unethical. From one Kennedy to another, just ahead of the Senate confirmation hearings, with the Murdochs also piling in against Bobby Kennedy. So you've got the Wall Street Journal and the New York Post both saying he's not fit. So I reckon those little confirmation hearings this week are going to be interesting. Tulsi Gabbard, I reckon, is going to get knocked over as the head of national intelligence. Well, she's an ex-Democrat, so the Republicans are not going to die in a ditch for an ex-Democrat. And she sucks up the dictators like a sad, So I think she'll be the definite who'll get knocked off, and then the other 2 will be like Hegseth, maybe 50-50 close votes.
Now, you said you went to Sydney. How did you catch up with in Sydney? Did you just meet it? Did you see anyone interesting?
Oh, look, I saw a few, I caught up with a few sort of journos and political types and governance types. I probably won't name names. I did go to one EGM up there, which was hilarious, a company called Novic Tech. They'd done a $1 million placement to a famous poker player, and that had sent the share price soaring from 2 cents to 8 cents. And they've got some blockchain, carbon. It's one of these sort of big crypto, sort of very, very odd situation. So I turned up to their EGM, and it was just me and 6 people in a room. The share registry wasn't there. And so
they must have been delighted to see you. They thought, oh, Christ.
We just ran it like
Stephen Mayne's here.
We just ran it sort of like a lesson on how you run AGMs and EGMs and general discussions. And at the end of it, I got a photo with the Freddie Turk, the executive CEO, with our thumbs up. It was what a great AGM. And but yeah, it just reminds me there are so many colourful small caps at the bottom end of the ASX. I mean, we've got 2,116 listed companies. There should be about 1,500. There are so many that are they're a bit of a joke as a public company.
Bit of a joke.
So, anyway, but that was good fun.
So is Freddie Turk's company a bit of a joke?
Well,
would you say?
Look, they've lost 20 million. They've got new management. They've done a capital raise, and some famous poker players doing tweets from afar saying that I'm on board for their blockchain excitement. I mean,
Do we like?
Look, it was a bit of.
We like Freddie, do we?
It was well. He was a nice enough guy, but I thought it was a bit of a joke, and we'll see what happens. But not a joke in terms of shareholder meetings will be Chemist Warehouse at 6 p.m. tonight at the Olympic Hotel in Preston, a pokies pub where the
Why are they doing it there?
Well, no, the 311 Chemist Warehouse shareholders will vote in favour of the $31 billion merger. No,
pub in Preston.
The Sigma meeting is in the Sofitel at 2:00. So
right.
I'll be going to that. So both companies have to meet to vote to approve it.
Oh, right.
So it's going to be amazing. I mean, the stock jumped 12% yesterday to a record high after they blew the lights out with $5 billion of sales in 6 months by Chemist Warehouse, with their earnings soaring by 30%. So it is just unbelievable. It's going to come in at company number 19 on the ASX, so it's going to slot in between REA and QBE. It's bigger than Coles, so it is
bigger than Coles.
It's bigger than Coles in market cap terms. So,
wow, I didn't know that. That's really that's amazing.
Yeah, and you've got 6 individual billionaires who will be minted today. So Mario Verrocchi, who's the founder and CEO, but his 2 younger brothers are both going to walk out of there with $1 billion today in shares and cash. So and the Gantz, the 3 members of the Gantz family. So it's 3 Gantzes and 3 Verrocchis are all going to be billionaires once the stock starts trading today. I was surprised they've suspended the stock this morning. Normally you wouldn't suspend, you just release the proxies early. So I don't know why they've done that, but we'll get the votes tonight. I'm going to ask if I can go to the Pokies pub meeting and watch tonight, even though I'm not a Chemist Warehouse shareholder. But
I think it's incredible.
Biggest float of the year. It's just unbelievable.
Well, what an incredible story Chemist Warehouse is. I mean, their stores are terrible. I hate going into their stores.
Yeah.
I mean, goodness me.
But they've got close to 50% of the market now. I mean, they've got 800 out of 6,000 pharmacies or something, but their stores are 2.5 times bigger than your typical pharmacy. So if you look at it from a sales point of view, they're getting close to 50%. The government's let them get into wholesaling as well, which I think was amazing. They allowed that vertical integration. Will they get rid of all the Amcal chemists now and convert them all to Chemist Warehouse? I mean, that'll be an interesting question I'll be asking this afternoon, because the Chemist Warehouse format is incredibly profitable.
Of course they will.
Yeah.
Goodbye, Amcal.
Well, I think so. And they're the new millionaires factor. I mean, there's 50 different shareholders of Chemist Warehouse who own more than $50 million worth of stock. 50 times 50, I think that's probably close to Macquarie. Macquarie's probably created about 50 people who've made more than 50 million. But Macquarie hasn't produced a single billionaire. These guys have produced 6 different billionaires. No other entity
no billionaire from Macquarie
has done that. No. Well, you've got Nicholas Moore and Shamara, the current CEO, are in the 3, 4, $500 million category. But Mario Verrocchi's shares are going to be worth $8 billion when they start trading. And the Gantz family, between the 3 of them, you're talking more than $10 billion. So it's just incredible.
Okay, before we get to this week's questions, here's a quick word from our sponsor.
Think investing is out of reach? Think again. Fund Later lets you own a $10,000 portfolio with just $4,000 up front. Fund Later will lend you $6,000 to fast-track your investment journey, and you can repay it in monthly installments that include a facility fee. There's no waiting, no margin calls, and you can choose from 3 professionally managed portfolios. And here's a bonus. Open and fund a Fund Later account in January or February, and you'll get free access to InvestSmart's online bootcamp course, valued at $99 to sharpen your financial skills. Visit fundlater.com.au to learn more. Terms and conditions apply.
Okay, you can start, Stephen.
Well, Nick says, I love the podcast, thank you. There's a lot of talk about tariffs and Donald Trump's apparent lack of understanding of how they work. If the US imposes tariffs, currency flows into the US Treasury. If the US then uses that to offer tax cuts, as we discussed earlier, doesn't that theoretically at least offset the price impact of the tariffs?
Well, yes. I mean, it's just like when we had a GST, that was offset to some extent by income tax cuts.
Yeah, but the thing about the tariffs, Alan, is it's going to be product-specific, country-specific, value-specific. There'll be a volume impact. So you can't just say, all this tariff revenue is going to mean we can,
So it's
slash tax cuts.
Yeah, but it's a weaponized GST. It's like it's not just across the board. It's like it's directed at people that Trump doesn't like or he wants to get something out of.
Yeah. The stat I read the other day that was most interesting is that the US equities are currently 70% of world equity value. But US trade is only 15% of world trade and has been falling. So since Trump first got elected, the US have done sod all new trade deals, whereas the Chinese and the EU have been doing lots of different trade deals. So America's trading position has been falling at the same time as the AI tech boom has been increasing their majority share of global equity markets.
Trump's America is trying to reduce their trade deficits.
Yeah.
So, that involves doing less trade.
And that's where we are probably the safest country in the world because we've got a US $25 billion trade deficit with America. So, we spend 50 billion US buying their stuff. They only spend roughly about 25 billion US buying our stuff. So, unlike the Chinese with the, $100 billion surplus, we can say, hey, you're already ripping us off, Donald. Leave us alone.
That's right. Rufus says, more a request than a question. Please continue to break down the impact of Trump on the Australian market and market segments. There is so much reporting it is impossible to understand what is noise, negotiating tactic actually relevant. For example, the threat to impose higher taxes on international companies and individuals. I was beginning to believe the narrative that the guardrails of the US system would keep him in check, but the remarkable scale of the meme coin grift has me thinking he'll do anything, and this will move markets.
Well, we should mention the meme coin. I mean, that is the most outrageous thing I've ever seen. He embraces crypto and then steals a big chunk of their market. It's almost like, sort of Putin, I'll let you billionaires prosper, but you've got to give me a big chunk of, of your giggle. So, and then Melania undercuts him. I mean, I can't believe there aren't ethics rules that stop him from doing that. And TikTok,
the ethics rules prevent him from taking direct money from people in return for whatever favours. But the thing is that people buying the Trump coin aren't paying him directly. They're just driving up the price of the Trump coin, which benefits him.
And he's 80% of the treasury. So he's the treasury for the Trump coin. Yeah. He's only floated 20%. But unlike a stock exchange, you can't go and search the register. No. So if he starts floating off or selling off more from his treasury holdings of the Trump meme coin to the Saudis or to Putin or whoever, you can't go and search the register and see that.
No.
So it's all invisible. So and then what about TikTok? I mean, he seems to have done a deal where Microsoft's in negotiations to buy TikTok, and he's gone soft on them when it's the law to ban TikTok, and he's just going, TikTok, you're okay. You helped me get elected. And then the questions about the Australian impact. So look, Rupert is a pivotal player. The Murdochs, in terms of how they handle it. Did you see James Packer is making a documentary on Melania through his company Rat Pack with Brett Ratner?
I did see that.
So, and Jeff Bezos, Amazon's giving them $40 million US to make the documentary, the vast majority of which goes to the Trumps. So that's another way they've monetized the presidency. Amazon can just slip the Trumps close to $40 million US. Packer and Ratner make a documentary, and the Trumps are $40 million richer. I mean, it's just unbelievable.
Okay.
Next question. We've got Will. Thank you for an interesting podcast. I hold a few shares in Adacel, and it recently disappeared from my online broker stock listing. So Will's got an interesting question here where quite a few companies are just delisting from the ASX. They're saying there's not enough liquidity, the fees are too high. And so, Evans and Partners, or the old Evans Dixon, they've just delisted, and I'm a shareholder in them, so I'll be going to their AGM on February 13, but it's an unlisted company. So Will's point is, how can they do it, and how do you sell the shares? And I'd say, well, at least they gave you some time, Will. Like the vote to do this in the case of Adacel was on November 27, but the stock didn't stop trading until January 8. So you did have 6 weeks to get out if you wanted to. But now that they have delisted, then you've got to, talk to a broker, or you've got to find some other means of selling. So
and Will makes the point that they've got less obligation to communicate to shareholders as they did as a listed business. So, yeah.
As a general rule, I will try and get out of something. I don't want to hold
No.
Because it's quite annoying monetizing that stock in the end. So, Yeah, but look, it's the ASX has lost 180 listed companies in the last 2 years. They've lost 7.7%, and more than 20 of them have just been solvent companies, not getting taken over, just saying, see you later. We're going back into the private space.
But as you said before, about 500 of the companies on the ASX are a joke.
Yes.
And so if the jokes go away,
this is probably a good solution.
Less laughter.
But just don't be left holding an untradeable, unlisted public company.
John says, question on housing and time to complete rates. We live in Brisbane and feels like we haven't had to water the lily pillies in 5 months. Plenty of rain, plenty of storms. Does any data exist on hours worked per individual in the construction industry in any comparison to the last 20 years? Thinking is any changes to potential severity of weather conditions impact construction completions? When I worked for a while in renovating houses in Burra in South Australia.
Wow.
And the rule was if there were 5 drops of rain on a piece of tally-ho cigarette paper that we held out, that was it. We're down tools. And so, yes, from personal experience, I can tell you that rain does impact construction.
That's why you did a strong CFMEU.
On the tally-ho paper method of determining.
Well, it's like play veterans cricket. And, if it's over 37, you get heated off. Yeah. But look, the ag sector has always dealt with climate interruptions. I guess you're right, that interruptions to construction. But I actually would argue that with climate change, another thing that people don't mention enough is just the damage to operations. So there's a company called 29 Metals that floated 2 years ago. They raised $500 million. They've had to shut their Capricorn copper mine near Mount Isa because 2 days in a row they had more than 200 mils of rain and they just cannot handle the water. So shareholders have lost $600 million. The stock floated at $2 and is now 21 cents. And this is just climate weather making a copper mine permanently unoperable unless they spend hundreds of millions building new retaining walls for water. So they're the sorts of climate impacts that
so bottom line, John,
really smash shareholders.
We reckon you're making a good point about this because climate change is impacting the ability of the construction industry to keep up. That's
Correct.
true.
That's
good
absolutely
point.
True. Now, David says that loves the podcast. He wants to come to Melbourne and attend. So, look, David, we might be able to accommodate you. Now, he's just got a question about BHP and Woodside. Why have their share prices both been wallowing below their long-term trend? And, David is right that BHP and Woodside have been underperforming of late. For different reasons. Woodside's all in on oil and gas. There's a bit of a fossil fuel discount with oil and gas. I think a lot of investors don't touch it. The capital costs of new projects are enormously expensive.
Maybe Mr. Trump will remove the fossil fuels discount because of drill, baby, drill.
Yeah, but as you said on the news, Alan, that the oil price is falling because Trump wants to get the price down. And, of course, that's bad for Woodside if the oil and gas price falls. So the profit margins are reduced from a lower oil price. So
I thought I'm saying that on Sunday, next Sunday.
No, you said it last night. You talked about Trump said, OPEC produced more oil and the oil price fell. You've also got the Ukrainians taking out...
I'm recording this this afternoon for Sunday. Exactly this topic, anyway.
Yeah. The Ukrainians are taking out much of the oil industry in Russia. It's not going to be much left of that in the next couple of months. And as for BHP...
China.
Why are they
it's all about China.
Well, yeah, and it's the iron ore price. And, it's not... It's back around $100. It's been coming off. So Jim says, actually no, we'll go to Paul. On a recent trip abroad, the conversation switched to the Australian exchange rate, which in 2014 was at parity with the US dollar. And then now it's down to the low 60s. And so Paul's question is, how does this impact Australia to have such a massive reduction in our dollar relative to the US? And how does it impact on things like house prices?
I don't think it'd have much effect on house prices, to be honest.
Well, I guess he's talking about the purchasing power, is that if you were an American buying an Australian house in 2014, $1 million bought you $1 million Australian house. Now, $1 million will buy you a $1.8 million Australian house.
I'm just saying, I don't think there are many Americans buying houses in Australia, that's all.
Yeah.
Maybe a few, but...
But should our dollar be so low? Why is it...
It's mainly low because the US dollar's gone up. I mean, and also the Australian dollar it tends to be a proxy for commodity prices, and in particular China. And the Chinese economy is weakened. Commodity prices have been soft, so the Australian dollar has come down for that reason, as well as the rising US dollar. And it got to 48 cents in whatever it was, 2000.
2000, yeah. I was in the US when it was that level. It was a killer.
And then when it got to parity, that destroyed the Australian car industry.
Correct.
So
along with Tony Abbott.
I guess that's right.
Yeah.
Campbell says, I'm a long-time listener, love your content. For an investment portfolio of Australian and international ETFs, how can I decide what allocation to put in Australia versus international? I've seen a range of recommendations from 2% Australian, which is Australia's weight in the global stock market, to sometimes even 50% or more.
If you're 100% ETFs, it should be majority offshore, shouldn't it?
Well, yeah. Look, I think the reason people tend to get biased towards Australian allocations, is because they know Australia better. That's simply it. I mean, if you're investing offshore in various other countries, you're taking a bigger risk because you don't understand those countries as much. Now, maybe you could do a lot of research, but we live in Australia. We read the paper every day. We understand what's going on with politics and the economy. So knowledge of Australia tends to be higher. So you should invest in stuff you know, and that's the reason for the bias. But then it's a question of your own confidence in how you. I mean, at the moment, the place to invest overseas is Japan. It's cheap. The market's definitely looks cheap, and the economy looks great. And so
a million Australians visited Japan last year. It's absolutely booming from a tourism point of view as well.
Yeah, well, Japan's booming in general, right? So, but the question is, are you confident enough to invest in Japan? Do you feel like you know enough about it to put your hard-earned money in there? Well, that's a kind of a matter for you, really.
Now, Chris says, just wondering what you think of the Mayne deal, which has seen the number of shares on issue more than double and the stable of apparel brands from Premier Investments transferred over to Mayne to greatly increase the number of stores. Solly Lou is about to join the Mayne board and has plenty of skin in the game. So, Mayne, buy, hold or sell? Well, I was surprised that the vote in favour was more than 95%. I thought there was a case for the profit warnings that came out after the documentation went out, but before the vote, did tilt the balance a bit in favour of Solly in terms of. So I thought they probably should have recut the deal, reduced the price by 10%. ASIC maybe should have said, let's have a new independent report to update the Kroll report. But in the end, it waved through with 95% in favour, and you've now got a much bigger, stronger Mayne with 17,000 staff and almost 800 stores. And I'm looking forward to seeing them negotiate with Westfield in terms of, cut the rent, Mr. Westfield, because we've got all these stores and leases, and so I think they'll be strong. And Solly's going to own 26% and on the board.
I like the prospects of Mayne. I mean, the other thing to note about the company is that Olivia Worth's in charge, the CEO, right? And she's from the Qantas loyalty program, so she's gone in there as a loyalty program expert. And so what's going on at Mayne is a combination of Solly Lou's retail expertise, which is, you have to say, undoubted. He's a very good retailer. And Olivia Worth's loyalty program expertise, which is also pretty good. And so I reckon, it's probably looking okay.
I must admit, Olivia Worth, I find her very impressive and straight ahead as a confident chair. So I was in Sydney, right? So I went to this Fleet Partners AGM and I was the only shareholder there. So I said, I better stick it out. And the Mayne meeting will go for hours because, there's so many issues. And so I log into the Mayne meeting at, 57 minutes in and it's all done. She's just rattled through it. David Kingston, who's a rich lister, who's a great shareholder activist, got up and gave him a big spray saying it wasn't a good deal. And she just said, David, your speech was longer than mine. And then look, the deal's in favour. See the proxies, and bang! It just went through. And then Solly had his meeting down the road, where there were no questions from shareholders, and there was no webcast or online participation either. but she's very confident, efficient. She just bats away the critics. So I don't like the fact that she's executive chair. I suspect Solly will become the chair soon. But look, she gets stuff done, and she did a good job at the Qantas loyalty scheme, and she'll probably do well.
So we've got time for one more question. You can decide who gets the Guernsey, Stephen.
All right. Well, Nick says, do you see a long-term future? And by the way, we had 22 questions this week, Alan. Not one from a female listener. Now, we don't have an abolished DEI policy here at the Money Café. This has just happened by all the men out there firing in with their questions. So
we're all in favour of diversity, equality and inclusion.
Correct.
We are.
And so a couple of times in the past I've had to create a couple of questions from someone called Judith just to make sure we don't have entire...
Now you tell me.
Yeah, this is a major confession. Greg might have noticed. I just did that twice. But this time I didn't do it and we had none. So female listeners, we'll put you to the top and ask some questions. But
maybe there's no females listening to us.
Well... Anyway, there's certainly no females on the podcast today, Alan, with you, me and James next time. So anyway, Nick says, do you see a robust future for stock exchanges if there's a continued decline in IPOs and buyouts by private companies, shrinking the number of listed companies? What would this mean for the super industry? And, yeah, well, I think that it's a worldwide trend.
I can see why you picked it. This is a favourite topic of yours.
No, but
I think you've biased here.
What's interesting, though, Alan, is that private equity is not exiting. So private equity is holding record amounts of companies, and some of their investors are starting to say, are we going to get our money back? So they keep buying stuff up like Virgin Australia, but they're not floating, they're not exiting. There's never seen anything like it where private equity are becoming long-term holders. And are the valuations true? Like, they're claiming all these things are still worth billions of dollars, but they're opaque. They're in private funds. So I think you're going to have to see private equity doing some floats, because how else do they monetize and give money back to their investors?
Well, that's right. The whole point of private equity is to hold it for 5 years and get out.
And then flip it, yeah. But because we've all had such shocking floats from private equity in the past, there's a perception that you never buy off private equity. So something's got to give there. And
speaking of something got to give, Greg's giving us the wind-up, so it's time to finish. Thanks, everyone, for listening to today's episode of Money Café, the first for the 2025. We're looking forward to, weekly serves of Money Café. I'll be back next week with James Thompson. So send in your question and we'll answer it together. Email it to themoneyreport@eurekareport.com.au. So until then, I'm Alan Kohler, all those things that I do.
And I'm Stephen Mayne, a contributor and intelligent investor, and we'll see you in a fortnight.